Good morning, Face. How you doing? Richard? Okay, I'll call you Bran. Hugo, how are you? Jays? How you, Ryan?
Morning, Dale.
Ali, welcome to Face. Okay, good turnaround Tuesday to everyone. I shorted gold at 1873 with a $13 stop. We'll see what happens. Yen is strong. Everyone doing okay? And what yields are, really yesterday from when Face opened, yields had did this. Still look good. Bull flag, little bull flag. Still looks pretty good. Yields heading up, Ryan.
Yeah, look at that way.
Yeah, I mean,
I
don't know if I would. Yeah, we should take out these highs, take out 178. And stock market, yesterday I talked about, there is a shot that this could be A, B, C, maybe back to the prior high. Same in NASDAQ. Mega cap doesn't like higher rates. Could be a B wave with a C to come. Prior highs in NASDAQ were 15.7. It wouldn't do any damage for it to sell off 400 points into here. Silver does. We'll get a pullback in silver. Looking at silver, I know it looks pretty good. It's threatening this 50-day right here. I think you really could tighten things up. Should silver close back under 25, the neckline, which it tested yesterday, then there's a problem. But I agree, silver looks better than gold. So we'll see what happens. I just did it because I had a little divergence here. It kind of has a little bit of a wedge look, so we'll see. See if it can keep ignoring higher yields and the yen pushing up to the upside. So, Stel, Ryan, what's on your mind? I didn't think EG would fall apart this fast. I didn't do it. I was going to buy at fibs, but it just kept melting through every fib. So I haven't tried it.
Yeah,
it's the euro, isn't it?
Yeah,
it's the euro basically. Lagarde, every time she speaks, couldn't be more dovish. And I'm not touching EG until it gets into the low 83s, which I think it probably will. That's where I'm going to get long. I know I've been saying it for weeks, but unless the trade comes to me, I'm not going to force it.
Yeah. Well, that's a pro.
It's also the Bailey and his cronies they're starting to wander into that. Hikes are still on the table, that sort of thing. So it is the central bank divergence we're seeing. Powell after the FOMC, we saw yields dump off. They've crawled back. The data CPI is coming higher. So the market's pushing the Fed narrative again. That's opening up the divergence with the ECB, who are going the other way. And in the middle, you've got the pound and the Bank of England, still mooching around. It's a close call on rate hike. So it's perfectly normal what we're seeing here in divergence. Pound yen's up, whereas euro yen's been still a bit soggy. As you say, euro sterling's down, euro's down, so it's just that monetary policy divergence play I think we're in at the minute, and it's all being driven by yields, as you mentioned, Dale.
Yeah. Well, I know that a long time ago, up through here, I was saying, if I had a chance when it was, trading in here, and Blake was saying the same thing around 113, that could be like the area to start looking for longer term longs. And we're almost at 96, and we could go 97.5, I suppose. There's no reason I can see technically to buy the euro. Even the daily has kind of given up the ghost. Well, it's right there at 30. So, but you can't find any kind of divergences. There's a 4. I don't like that look. So 15-minute. Yeah, you got a little divergence on the 15-minute, so you could find them somewhere if you look hard enough. Yeah, so I'm certainly not in the mood to try and bottom pick euro here.
No, look. I mean, look at the bounces. Look at it from 114.60 to sort of 40. It fell down to there, bounced as far as 60, and then crapped out. And the same thing here. We got down to 113.50s odd, and the bounce has been to 60, 70. It's nothing. Very weak. Very, very weak.
And the dollar is, diverging on some shorter term time frames, but not on the 4, a little bit on the 2. I mean, the dollar could pull back before it makes its final move to wherever it's going to. And I guess I'm concluding that this is going to terminate somewhere, and the dollar's going to head back down. I tweeted yesterday that if you're feeling weary from top picking the dollar, cheer up. It's just the milkshake theory. So I'll have a chocolate malt, please. Anyway, I still think we have some higher levels to go in the dollar.
Yeah,
I don't see that much to do.
96.10 is the level in Dixie.
Yeah, you've had that forever. I will try something up there.
I will too. And let's see. We were talking about the pound before. Probably worth mentioning. We did get average earnings index plus bonus this morning, and it was 5.8% year on year. Now let's remember that inflation is printing in the 3s, so that's still a pretty decent gap. So yes, inflation is rising, but as long as earnings are rising as well, that's definitely not a bad thing. Granted, there's a big difference between in which types of employment earnings are going up and which are not. You'll probably find that the lesser kind of lower specialization jobs are not rising as fast, but still it's a number that the Bank of England looks at. I think now, given what happened in the last meeting a couple of weeks ago, I think they're going to hike by 15 basis points in December, unless we get something out of the ordinary generally. But I think they're going to hike 15 basis points in December. The market's definitely not pricing it fully, or maybe it's not completely pricing it. I think that's going to bring that one last push in euro pound lower, and then we start retracing. But just wanted to point out that the earnings number was pretty good, and still a decent gap from inflation, and employment number is also good. So overall unemployment rate dropped to 4.3%. Not a bad figure historically. But inflation is still the big problem for all major economies, and that's what they have to fight. So yeah,
I agree, mate. That was down from 7-point-something percent the month before, which again reflects those lower paid jobs probably coming back into the market and lowering the average.
Yes,
but it's still September data, so I'm not sure how much of the end of furlough it captures. So I think I said a while back, it's going to be the October-November data that's going to be important.
Yes,
to see what happens with that furlough. Same with the US.
Yes, our friend Jay is asking, do I see silver going to 40 by December? I think December is very, very close. I don't think it's going to get to that fast. It's going to get there eventually, but. Yeah, that would be nice, but I don't think so by December.
And silver going to 40?
To 40, yeah. 30 is a big level. I mean, 30 could be
28. 28 would be an accomplishment in 6 weeks, I think.
Yeah, I agree. It's not a huge. It's not a huge amount, to get to 30 from here. It's what is it? 20%. Yeah, it's a big move, but it's doable. We've seen a lot worse. And there's another friend who's talking about who's asking about cryptos and why they're dropping. I think the main reason, I was out this morning, but my friends in the chat room brought me up to date, and it's one of the reasons why I love the chat room. I was out for a while, and then I just came back and I said, cryptos are dropping, what's happening? And Simon, very nice of him, goes, I think the Twitter CFO ruled out any crypto investment for now. and that kind of brought a little bit of pressure. And Bitcoin is flirting with 60K again. It's, again, in the grand scheme of things, it's still on an uptrend, but pretty big move for a day. So yeah, that's the reason. That's the reason cryptos are having a little bit of a wiggle today. Otherwise, we get retail sales today. U.S. retail sales is going to be important. Let's see how the consumer gets affected by everything that's happening, by inflation rising. And also, let's not forget, people are getting back into the workforce, getting paid less than they were getting in handouts. So, disposable income kind of might get reduced for some people. But definitely an important number. Usually retail sales is important, but I think this print, the next print, are more important than usual. So let's see.
Agreed. Yeah.
Anyway,
Dale nodded off, is he?
No.
No, maybe
I mean, there was so much to talk, about yesterday. It's turnaround Tuesday. I'm looking around and searching for trade. So, what do you think about how Canada held? Almost got back down to this breakout. I don't know. It doesn't look that great. That's a great bounce. I just don't see that much. So, I used to like to hear my self-talk.
Yeah, I took a long yesterday because we had what was the headline? Oh, we had the Macklem headlines, and he did an article in the FT, and it was pretty straightforward, really. He was saying, no, if there is a problem, we're ready to change as we need to. But the headlines that the Wires reported were like, if inflation jumps, we're gonna hike rates, and they went a bit to town on the artistic license, let's call it, on the headlines. And that's what sort of dip. And I read those headlines versus what the actual article said, and I thought, right, I'm buying that because it's not as strong as they're making out. So I got in at 125, just above there. And looking at the chart, the 125, 124.90 is the area. But unless we get above 126, I think the risk is that we're going to break this 125, meaningfully, if you like, and we're going to see a move, probably maybe down to the low 123, something like that, if we do get a break. But get above that 126, and then you start looking at the upside from there on. And Euro Swiss is another one. I've been looking at the 105 area, and we were creeping down. We got close overnight, 105, 10, 11. Seen a bit of a bounce there, but again, just as I'm sitting here now, it's dipping back down to 105.27. Again, following the euro, whatever the euro does. So we've got a few pairs, a few decent levels that are not really out the woods, shall we say. I'm potentially looking along in the Euro Swiss into that 105, but I'm going to be wary of a break. Similar to Euro Sterling, as we were talking about it, it's getting back down to that big 84 handle. That was a great long play the other week. We obviously got the options action down there, the barriers down there. They held well. And if we get another little dip down there, I'm going to try that again for a long. But I'm going to be a bit more cautious and maybe look to put in a reverse if we do a full handle and see if we can run the short that way. But decent levels to look at the moment.
Yeah, well, actually, one more thing I wanted to mention. Our friend Paul says regarding sterling, he says he will still have a way to go with the pound, as there are lower paid jobs, less money, but the vacancies in these jobs are massive. If no one will do the job, wages will have to rise. Exactly, and this problem is becoming bigger because you no longer have the ease of access from European countries for people coming to work, and a lot of these people took the lower paid jobs. So this is going to be a problem, Paul. I agree 100%.
Yeah, problem all round, not just for the UK.
Look at silver.
They've still got truck driver shortages in Europe. Just as much as they got in the UK and everywhere else.
Yes,
getting the people into those jobs.
Yep.
Wow, look at that move in silver and gold.
Yeah, baby.
Yeah. So I want, and good morning, guys. How you doing?
Morning, Blake.
Good. So I wonder if a lot of this movement that you're seeing here is related to some of the crypto moves lower. We've constantly talked about the move between the two. the relationship between the two. So, you see that. And now, Stelios, what did you say was the sell-off in Bitcoin overnight?
That was a Twitter CFO saying that they're not going to invest in cryptos in the near future, or however he said it. So because there was an issue, maybe they were going to do something, but they're not.
Got it. Okay.
China going to put levies on the miners or something.
Yeah, but they've been talking about levies and penalties and this and that for a while. But yeah, it's kind of a double whammy.
So just looking at Ethereum and Bitcoin, first of all, Bitcoin, I think bulls need to be a little careful because of this like false breakout. That's twice now. And, I'm not bearish, but I'll tell you, if we start breaking probably back below this support here, which comes in around 52,000, you have some trend line support somewhere in that neighborhood. I think, if you're bullish and you've been sitting around waiting for it to move, to the 74,000 level, which is the 127% extension of this last move, you're probably not wanting to stick around much below that. So I think if you do own Bitcoin, you got to be a little careful that just because of these false breakouts here, ascending wedge. Ethereum also, we completed 161% extension. I was looking for a little bit higher in the cup and handle pattern, but in all actuality, it's completed. So, if you're bullish Ethereum, you're probably a little bummed out too. So just keep in mind that this crypto move can, create a little bit of havoc in other markets too. I know you guys were talking about the euro. Did you guys see that the euro actually hit? Now this is my chart of the day actually on Thursday of last week. And then again, last night, because of the big moves that we saw in the euro. And I know you guys have talked about the euro, and I got asked multiple times yesterday, what's the reason for the euro weakness? Still, as you pointed out earlier, it was Christine Lagarde who seemed, dovish, which she is, but it was really a euro cross move, like literally the euro cross move, like every euro cross got destroyed yesterday. And we completed the 161% extension overnight, right at the 130.50 level. I think the low today was 51, right? And
that's what you talked about 3 months ago, Blake. That level.
Yeah, I mean, we're now here, and I think you have to be careful. I don't necessarily.
Nostramoro.
What's that?
Nostramoro.
Well, I don't know about that, but I mean, the fact of the matter is the euro has been trading heavy. We've referenced that a lot. We've talked about the dollar breaking out. It's something we've talked about constantly for the last couple of months. But if you're short euros, you have to be careful here. I personally, I started buying euros yesterday. So I started picking up euros yesterday, and it's not like I'm getting long counter, like a lot of people think that the euro is going to bottom here. I don't. I actually think the euro's got further to go. I think it's near term. We're at some support. And I really feel that over the next, week or two, I mean, remember, we're going into Thanksgiving week. We're going to have shortened weeks next week.
Yeah.
I wouldn't be surprised if the euro, just trades between this 113.50 to 115 level, for the next week or so. It's been a big
line.
What's that?
Your pink line down there.
That's where I ultimately want to be long euros. But
okay.
If you just think about the last 2 weeks, the euro has sold off almost 3%.
Yeah.
That's a big move in currency world. I mean, Ryan, you used to trade on the floor. You know how central banks are. I mean, a 3% move for a central bank, that's a big move.
Yeah, it is. It is a fairly big move, but this is what we're trading. We're trading these central bank divergences. If Powell says he's going to be dovish and in the next minute you get a strong CPI print, the market goes, hang on a minute. But with the ECB, going back to the pigs will fly analogy,
yeah,
it doesn't matter if inflation drives to 5%. Those lot over there will be QEing till it's coming out their backside. They're notorious for being late. For not recognizing the problems that are in front of them. At least, with the Fed, if they do finally see a problem, they'll act on it, whereas the ECB maybe won't, or they won't act enough. And, the market knows that, and hence we get this divergence. But it is a big move, and you're right what you say. But conversely, how many people were lining up to sell 115 after the break? And the problem you're going to have potentially is that a lot of people are going to be sitting there going, if we see 115, I'm going to short it. But if we go from here to 115 fairly quickly, there's going to be a reason behind it. And if you're not on top of what that reason is, some people are going to pile into shorts at 115 and they're going to get a smack. And, you can bet you there's going to be a ton of stops through 115 building up there. And so, shorts right now today at 115, I wouldn't be that comfortable with unless I was keeping it really tight and looking for a reverse into a long, at 1510, 1520 or something like that. But it's like you say, you've been bearish and saying that this could happen for months, and here we are. But even now we've got the break. You're smart enough to know, hang on, we've gone a bit too far here, possibly. Short term, could we see a bounce off some of these levels before continuing lower?
Yeah, and so I was just telling people in the ForexAnalytix community, I think that we can see a bounce here. I don't know if we're going to make it all the way up to 15, and I think your point is valid. We're going to have to see data to really support a move back up to 115, data. One of the pieces of data that we're going to get today is retail sales. Now, one of the other things that we need to be paying attention to with retail sales, and I have been pretty vocal about this, talking about the consumer is going to start being affected globally, not just here in the U.S. but globally, by all the rise in prices. And all these higher prices are going to really start to weigh on consumer spending and behavior. One of the things that's probably going to be more, I would say, maybe more eye-opening and maybe more revealing for the consumer. We have Home Depot and Walmart earnings today. So listening to those earnings calls and seeing some of the headlines that come out of that, I think might even be more revealing about consumer spending. But those are things that you should be paying attention to now. It's not just black and white, like, oh, jobs, oh, interest rates. No, there's going to be way more factored in to what you're doing, especially in currencies. And that's why it's important to make sure you're listening in here every day so you can stay up to date on the best and some of the most important macro developments that are taking place right now. So we'll be watching retail sales. What'd you say, Ryan?
Yeah, I agree 100% with that. And just to sort of contradict myself on what I've just said about the euro, if we get a really shocking retail sales report today, you're going to see the euro pop probably up back up through 114 if it's really bad. Now, is that a rally that you want to sell? Because retail sales being bad, but if it's bad because of inflationary worries, is that something that will tip the Fed closer to a rate hike, which is obviously dollar positive?
So instead of
that's the sort of rally you want to the sort of rally you want to hit, rather than something that's big news that sent it higher.
So what Ryan would be talking about is maybe something like this, and I think that the euro could actually recover to this 114.30 level. So seeing a move back up here that you can sell into back in the direction of the overall trend. Now, Jay was asking about the Euro Aussie and asking if it's a good buy down here. Yeah, it's a good buy. Good buy house, good buy car, good buy girlfriend, good buy wife. There you go. It's a good buy. Just kidding. It's a bad joke. That is a bad. I know. It's Dale. That was almost a Dale joke. Dale, did you get that one?
He's nodded off again.
I think he took off. He's like, I'm out of here. As far as the Euro Aussie goes,
I like it.
Okay, I was just trying to whip one out for you. All right, so
he's written that one down. He's going to use that again.
He's sitting there jotting it down. Exactly. He's like,
I added it to my dad joke
RV, goodbye, boat, goodbye. All right. Anyway.
I heard there were 10,000 husbands that went out and bought it.
All right, so let's talk about the Euro Aussie and kind of the technical developments that we've seen here as of late, because it's been very technical. Head and shoulder pattern completed perfectly. Come out of the channel to the 200-day moving average perfectly. And by the way, if you are a ForexAnalytix subscriber, you knew about all of this as it's taken place. If you trade the Euro Aussie last week, the rejection of the 200-day moving average was a big cue. So I mean, you break back below 154.50 or 156.50, and it's like, okay, well, that's where your risk is. Now, Jay asks, is it a good buy here? I would say as long as we hold these lows. I mean, and you know what? I wouldn't be opposed to buying it here if you feel that stocks are not going to see the light of day above 47.25. If you think the S&P is going to stay below that 161% extension of the wherever, let's go over to here's the S&P. You're not going to see above this 47.25 level. If we're not going to see above that, then yeah, you want to probably be long the Euro Aussie. It's going to create a higher low, which gives it the basis for a move back above the 200-day moving average. Now, if you're out there trying to pick the bottom here, just remember, if you pick bottoms, you might get smelly fingers. So just like for real, like so just be careful with that. Okay, so long here, but I wouldn't get aggressive until you're back above that 200-day moving average. And Stelios was sitting there going, hey, wait a second. I pick bottoms.
You know it, baby.
Anyway. All right. So we're a couple minutes from the retail sales. Now, one of the things I just want to point out, if you're a ForexAnalytix subscriber, which is, by the way, it's only $1 for 10 days, come in and join our community. This has been the slowest day in the markets today.
Since yesterday.
I don't know. I think today, I woke up today and I'm like, oh my gosh, there's no charts to really update. But you can see how much talking just goes into the last hour and a half that I've been awake. That would be, or I say I've been awake. Last hour and a half, I've been in front of the computer, which would be right here. So you can see all the charts and all the talking that's just in the general chat room. Then you have your news and research room. Then you have your trades room. And by the way, I've got to mention this because this was just news to us today. For those of you that are long or in the ForexAnalytix community, we are going to get our first update of the software that we've had in 3 years. So all those messages that have been in our history for the last 3 years is going to go away. Just letting you guys know. And I'm going to warn everybody this week, all week long in the ForexAnalytix community. If there's any research that you want to keep in the news and research room, download it on your computer, re-upload it because we're going to, once we update the software over the weekend, it's going to erase everything. So just letting everybody know, we're a couple builds behind on the chat room. So that's being done. Anyway, if you guys are in the ForexAnalytix community, you guys got the chat room. You guys have the data flash, which is right here. One of the things that you'll get also is you'll see that this is our live blog. Oh, I can't even say that. Live blog. It's integrated into the ForexAnalytix platform. A lot of stuff is updated here, and it does not get tweeted out. Like it. You follow us on Twitter and you think you're getting all the information from our team. You're not. It's the live blog is integrated right here. So you're going to get a lot of, stuff that you can't get anywhere else, just right here. But this is the data flash. We're going to know exactly what the retail sales are when they come out. How much time do we have, Stel?
A minute.
1 minute.
30 seconds.
30 seconds.
Yeah.
30 seconds later. Okay, so let's go over to I want to buy that. Sorry, I am probably going to be buying that today. I've been meaning to buy that. I played that last week. Whoops, not 1 second. Let's go over to a 1 minute chart of the US dollar, Japanese yen. How much time do I got?
5 seconds.
Damn it. Dollar yen. Where is it?
Too late. I'm kidding.
Yeah, the
Boom,
flash.
strong retail sales data.
Is
And the
it?
dollar yen
I don't
likes
see it.
Yeah, better.
Yeah, revisions
1.7%.
are better. Yeah. Actual number, good numbers, So the dollar is strong. That strong data gave the dollar a little bit of a lift here. Here, let's go over to the euro. The dollar yen. I mean, how many people are shorting dollar yen up here?
They're idiots.
I mean,
I mean, yeah.
let's not call them idiots, but I mean,
I know.
But think about like
I'm
how many people are like, oh, it's overbought. It's gone too far. It's not. I mean, look, this is a really, really big bull flag pattern. And remember, if yields continue to go up, this thing is just going to, move higher. We break above 115, and we're probably going to be moving into that 115 to 118 range next, which seems very logical in today's environment with rates going
metals
higher.
are coming off pretty good too.
And by the way, I just stocks are coming off just a little bit because remember, stronger number, more hawkish Fed. I just bought a little bit more euro dollar down there at 113.60. You might have heard my computer ding a little bit. So we'll see. I think some of these, I think the dollar is probably going to pull back after this data this morning. So Dale, Stelios, Ryan, Dale, I'm going to let you go on to your interview. And I want to say, everybody, make sure you visit our webinar sponsors, Forest Park FX. If you haven't figured out that you can actually get cash back on your trading, like here in the US, I actually started getting cash back on my trading because I went from, institutional JP Morgan platform for the last 5 years, back over to trading my own money over this year. And I'm actually getting cash back rebates on my trading, which is cool. So if you haven't figured that one out,
bro. Yeah.
Visit Forest Park and let them know that we sent you. There are webinar sponsors here in the Face webinar. So thanks everybody. Dale, it's all yours.
All right, thanks. Yes, and remember everyone, if your broker can't see the forest from the trees, call Forest Park FX and it'll be a picnic. Welcome back, James. How are you, buddy? This is your kind of market. Mr. James Henry Anderson, how are you?
I'm good. Can you hear me well?
Yeah, got you.
Okay, great. Excellent.
Nice to hear your voice. How
yeah.
you been?
Good, man. Good to be back. How you been?
Good. This is your kind of market. So the move looks like it's high probability of being underway here. What are you watching? What's on your radar?
Well, let's see. I'm gonna try and share my screen this time. So we can get that done.
That's that little green button there, buddy.
Yep.
You got it.
Okay. Let me know if you can see me.
We got it.
Cool. All right. Obviously, I'm just showing you
or the chart.
You can see the chart. Yeah, the
yeah.
FinViz chart. Right. I mean, we're just looking at 1 year performance, and obviously commodities are starting to surge now, right? I mean, I was looking the other day. Even coffee is starting to break out. Get ready for record prices at your local Starbucks and Dunkin' Donuts for their highly syrup covered coffee beans. But I mean, I can see it around here where I live. Coffee's in a massive bull market. There's record prices all the time for geisha beans here in Panama. So every commodity is breaking out. Obviously, gold and silver last year have underperformed. They kind of, they've been consolidating. And the consolidation, by the way, in silver, it's never been anything like this. I mean, the consolidation we saw for silver in 2010 was pretty good sideways for a while in the high teens. And then we busted out to mid 25. And then from 25 ran up to 50 pretty quick, and that was just a precursor. It was a lot like the mid 70s, kind of like the precursor to,
you weren't around then, were you? How do you remember the mid 70s?
I look at charts
from your dad.
I look at charts and talk to grizzled vets like you, buddy.
I was, in my, 20s, but and I was there, but I don't remember it.
Yeah, a lot of people probably say stuff like that.
Anyway, so we had a range like, so I mean, everyone's making the 70s analogy.
Sure.
Are you
Sure.
wearing a win button?
No, but
No, you're probably on the other side of it. LIN, let inflation win.
Yeah, I personally think inflation is going to be the way out. That's always historically been the way out. I don't see the U.S. government defaulting outright and legally doing that, like something that, like an Argentina type style where they just flat out default on their bonds. I think they'll just go the easiest route, which is high inflation for years and years compounding ahead. They've already been doing it with, low interest rates, obviously suppressed. And we never thought we'd see negative interest rates in a lot of these countries. So, basically, for as far as you can see, the only thing in between here to there is probably some bank failures and a deflationary episode. But they'll come back in and hit the printing press again and start slamming the computers and printing more trillions. So that's the only thing they can do. It's obvious. It's to press the interest rates low and to keep creating currency to keep the system from falling apart. And then once it's about to fall apart, they'll probably do some type of political reset and create a new supranational, more of a multilateral system for the world to trade on. And it won't just be dollar dominated. It'll be multi-fiat currency dominated. The US dollar is not going to zero. I don't think we're going to an hyperinflationary environment. I hope not. But there are those out there like Victor Sperandeo, a guy like, him, he's been, in the financial markets for a long time. I mean, he thinks that the prescription for this is 4 months of plus 50% inflation per month. And then you write off all your debt by 90% doing that. That's not what I would want. I wouldn't want to see that. It would be ugly. It'd be like pulling a real hard Band-Aid. But if you want to compete neck and neck with China in the coming decades, that might not be the worst way to do it. It's just to do it quickly.
How about 50 in the Dixie over the course of the next 2-3 years? Would that do it?
I don't think so. I don't think that's enough. I think you really, I mean, what he
really cutting it in half is not enough.
Not enough. It's not enough. No, I don't think so. Not unless you do a political reset and come up with some new system and everybody kind of muddles along. You could do that. And ultimately, my feeling is that we'll go back toward like a 1934 reset more so than a 1980 type, where we literally could have gone back on a gold standard in 1980. I don't believe that's going to happen. I believe they'll come up with some political solution where they claim it's commodity backed and that it has some gold lacing or what have you, but it'll be a scam, just like it always is with those folks.
Okay. All right.
So we're looking at this gold price chart, right? Obviously, this thing has been consolidating sideways. It's starting to look like it may break out. 1900 will be a big test. See if we can get past this 1915 and into, a test back toward 2000.
Well, a lot of people, James, are looking at that it did break out. If you drew a trend line from the high in June of 2020 and then the high in June of 2021, 1830-ish. Was a big level. To me, for the bullish scenario to continue, it's got to hold that.
Yeah, it seems like it will. And let's look over at silver real quick. Like I said, this has been the longest sideways consolidation. Let me back this chart out. It's just a little bit here, so you can kind of see the 2010 in. Let me get the logarithmic. All right, so you can see, in 2008, we obviously slammed down, but we moved sideways for a good bit here in the teens, and then all of a sudden, it just blasted straight up higher. And here we are consolidating in a larger range at a higher level. So, it could come at any point, but once you break beyond 30, I expect you'll see a wall climb back toward 50 very quickly. And this time, it's not gonna be that situation where we can't get through 50. I think ultimately, the Federal Reserve and the U.S. Treasury knows they need to let inflation run hot. And, ultimately silver and gold running higher is one of the easiest ways to do that. And so that's ultimately what will happen. The question is, how and when exactly will it go down and by what reasonings?
Do you do anything in the minors, James, or
I do. I have one miner, only one, and it's just a bet on a really large mine in Russia.
Okay, so it's kind of like an exploratory, highly speculative one.
No. It's actually one that just pays a dividend, and it's basically because I believe their reserves are so strong, and I believe Russia is going to be a gold dominator of this world for the next decade or so, and this company is going to in Siberia, there are huge gold reserves, and I believe that they have.
I hear they don't have to pay much for labor in Siberia. Huh?
Yeah.
As you sit on a mountain in Panama, just collecting the royalties off the sweat of the brow of people that are repressed, digging out gold for you.
Well, Russia is already.
How do you feel now?
They're already a gold powerhouse, and I don't feel that bad because I mean, think about how many people that we fed off on, in the emerging markets who make all the goods and services that we've gotten over on with our fiat currency. I mean,
you want to give the name? Someone's curious.
The name? No. Let me pull it up because I'll misspeak it. Hold on one second.
Stoli Minerals.
No, it's POLY.
Stolichnaya Minerals.
Hold on. Poly. The name.
Yeah, it's a nice flag. People are.
Here it is.
Paulus
sponsored. Polyus sponsored. It's a Russian company, obviously. So keep an eye out for the Russians. They're not that trustworthy. But this company, they have massive reserves, and it's a bet for a long-term bet. It's not. When I sell a lot of my bullion, I'll probably still have this because it'll be printing cash pretty consistently, I think, for the coming decade or so.
Okay, where are you selling your gold at 2,500?
No, it's much higher than that. 2,500. We're just going to be getting there. It's really a question of what are the fundamental. How is the currency market looking? What's the system going to be next? What percentage of my portfolio is it now? I need to draw it down because the mathematics prove it. If you go back 50 years. Mathematically, in a fiat currency regime, you do the math on the back testing of it, you need to have about a fifth of your liquid net worth in bullion. And the question is which bullions at which time, which, precious metal, whether it be gold, silver, or platinum. I would suggest right now, silver and platinum are probably the most undervalued of the three. But gold makes total sense because it has low volatility, and it's just going to be, I think, a bedrock of any portfolio for as long as they're using fiat currency or fiat.
It's a flight to quality in the metals.
Yeah, especially in a world where fiat, CBDC grids are coming, where your privacy is going to be gone. I mean, having something that is very hard to trace and track, and having that you have outright with no counterparty risk makes total sense. So I think having it always, some portion, makes sense, especially in the world we live in. But I think at some point it's going to get into a mania phase, and you sell into that. That's what you do. But sure, sell into that.
Okay.
The other thing, let's look at another chart. We got a little gold silver ratio.
I was going to ask you. It looks like if you just take the last section from 79, it looks like a little bit of a head and shoulders top.
Yep. Yeah.
Or
that's what it looks like.
Or is this a big head and shoulders bottom that we're putting in the right shoulder?
I don't look at it. You can look at it one of the two ways, and we're going to know pretty soon. If this thing bleeds beyond, down towards 70 or beyond 70, it could get back down to low 60s and be beyond next year at some point. I would not be surprised next year if we go on a run and it gets back toward the 50s. It could quite possibly happen.
Favors favors silver if you're a trader. Your preferred long is silver.
And just back it out too. Remember that hedge funds are constantly using the gold silver ratio as a parameter for which one they have more of an allocation into. And when silver starts running, they start really piling in momentum wise into silver, and it can really get going quick. And so it's a big, you can see this median range just looking in the last 20 years. Like, this is the median range essentially. You break below the 62 level, and now you're in an absolute breakout bullish market for bullion, for at least the monetary metals.
So, James, do you think the Fed that began a taper finishes the taper, or that there's going to be some type of pressure, or the economy, like after a lot of economic indicators are already rolling over,
right?
And they'd be assisting that rollover by continuing to taper and then tighten. Do you think they'll
they're still creating
follow through, or are you a Ray Dalio in his camp where they'll start it and reverse it?
Yeah, I believe it's that. They're still going to be doing $100 billion a month, and they're doing it in order to keep the system from falling apart. And I think if they stop doing it, the system will fall apart, and that will be a real problem for them. So I think they're going to lie through their teeth, all day and night, just like they've always been doing. But it's going to become more and more obvious to everyone as time goes on, and credibility and confidence in whatever they're trying to do is going to start really falling apart. And that once you get a rush out of high net worth investors who have really small allocations. I've done the math on it. They're like low single percentages of, I'm talking about people who have 50 million or more in net worth in the world. And there's a lot of those people today. There's hundreds of thousands of those people today, and they have very low allocations to physical precious metals.
How about crypto?
Crypto, depending on what you're talking about, I would not bet on any crypto that is not going to be the underlying programming for the fiat CBDC grid. So I would not be betting on Bitcoin. I would not be betting on, these high flying ones right now. I would be looking at ones that are technologically more sound and ones that will actually be the programming underlying what the central banks are going to be doing. And that those will ultimately, there will be private tokens that will do well. Don't get me wrong, there will be, but they're only going to be a select few, and it's going to be very, very difficult for people to guess which ones those are. And a lot of people are going to get wiped out along the way.
Jane's guessing XRP. Is that Ripple?
Yeah, XRP is one bet that you could do. That is one of them that is underlying the fiat CBDC grid. There's another one called Hashgraph Hedera HBAR. That's one you could bet on. I would suggest not going in pretty heavy until Bitcoin. If Bitcoin rolls over and does another crash, that is the time to be allocating toward these smaller ones that will be part of the programming of the underlying grid. I think Stella is another one is another name, but those are like the there's a select handful or so that are actually being used to program various countries' CBDC grids that are coming. And
so my Lincoln 1909 VSBD still worth something after crypto came in here?
I don't know that one. I'm sorry.
That's a penny. That was the most desired penny in the penny collection book.
Oh, okay.
The 1909 VSBD.
Well, on that topic, when you're bringing up pennies, you know that the the copper ones are 3 cents now, but the cheap zinc ones are almost face value. Pretty soon, those are going to be more in melt than the actual zinc. So you're going to see disappearing pennies of copper and zinc, and disappearing nickels. Both those are going to be going away. People are going to be melting those down illegally, of course. And I'm not suggesting that you do that, but get ready to see that in the coming decade.
Well, I'm telling you, shortages of everything. James, I mean, I don't think, Western democracies, if they still are are used to living without, not since World War II, where, they had to put wood on automobiles because they needed the metal for the war. And people collected everything back then. And everything was rationed. Gas was rationed. Everything was.
What's happened before will happen again, in just different twists and turns. It's just a little bit different with technology.
Oh, you sound like Solomon. There's nothing new under the sun.
There's absolutely nothing new. We're the same flawed human beings. We're the same flawed human beings.
I'll tell you something, James.
Yeah.
This is the most energetic you've ever been during an interview. Okay. So I don't care if coffee beans are going up.
Keep it
it's not stopping you
I'll tell you
from having 20 espresso.
They're cheap around here, brother. They're cheap.
Yeah. All right. Well, you're probably enjoying it, and phone's ringing, and it's always nice to be validated, especially during like long consolidation periods. I'm glad for you, buddy. And, you have ways where, do you believe that people should mainly have possession and just find a good, secure place where they could get to their gold and silver?
Yeah. Or, I mean,
go ahead.
First and foremost, if you're getting bullion, take some in hand. It kind of teaches you the learning curve quickly. Don't get too much in your house because it becomes a little bit of a risk. You can use Brinks, Loomis. You can go directly to these secure, storage facilities and get direct storage accounts with them. And then, you have your dealer deliver it to your, storage account, wherever it is. I mean, it could be in New York, Miami, LA. There's others offshore in Singapore, et cetera. So there's a whole bit. And then as well, if you just want to do a bet that's sound in a brokerage, if that's what you're used to, go with PSLV. You can see that chart right here. And right here, this black line where it goes up a wall, that's when the silver squeeze essentially started. PSLV would be a suggestion if you're going to do like a long-term bet. Only SLV if you're doing options and stuff. Otherwise, just read the prospectus. It's actually not the most secure way to bet on silver. If you're just doing it short term, go ahead. But I'm talking about long term bet. PSLV would be the brokerage option. But one thing, real quick, you can see that the Wall Street Reddit apes.
Oh yeah, growing. The Reddit guys. Yeah, they're getting ready.
and they're going to use them as the front run cover. I think underneath it all, you have Paul Tudor Jones talking about the bully crowd that's going to come into commodity markets, and they're going to come probably using Wall Street Silver retail as the cover for the headlines. But underneath it, they're going to be the ones ramping the prices of silver and gold. And, you know, obviously I told you 1934 is where I see. So this blue line, I think is definitely targetable. You got around $7.5 grand right now. So that I think ultimately, and you look at these charts, just look back at like 2011, look back at 1980. This is GDP versus gold. We're going back to 20 at least. This is the, you know, S&P. Obviously we've had a kind of a dead cat bounce here, but you can bet that sometime later this decade that 2011 will be passed. So if you have a lot of gains in stocks, take some profits and go and put some in the bullion. This is housing prices, another dead cat bounce. It'll go below 2011. I would suggest that is going to happen. Same with silver. This is houses in silver in the U.S. 5,000 ounces or below is an easy bet in the decades upcoming. This is in.
So that means silver outperforms, or housing comes down, or both.
I would suggest silver outperforms. Housing nominally probably won't come down much because the inflation's going to go so high. So I would just suggest that silver will outperform in real value terms. That's really what we're doing. We're cutting the fiat currency out of the picture when we do these divisions between, you know, houses versus gold or versus silver. You know, this is Australia. You can see this is going to roll over back to 100. This is the UK. You know, that was propped up in 2011, but I bet it goes back toward 100, back like in the 1980s era. You know, this is in silver. Look at that 2011 low. And then, you know, obviously they've been lying about inflation. We know that we're near almost 15% again, like we were in the late 70s. And so, you know, the lag here for silver and gold to actually perform is just, it is what it is. It's lagging because ultimately they have the power in terms of the derivative market until you actually have the high net worth crowd really run after the physical and the shortages ensue. You're going to have, again, a situation where there's going to be a shortage in silver bullion, deliverable in size at a reasonable premium over spot, and then that will lead into the gold market. That'll be the end game of this, where you have a literal gold shortage of a highly available gold bullion bars in decent volume at a deliverable date at a price that's anywhere near spot. You will have a huge premium for physical bullion. And the final chart here, this is it, Dale. This is the 1970 to now, to, you know, 2021. The blue line is the price of silver throughout these 51 years outside of the COMEX hours. That has a price of silver at 230 an ounce. And you have the red line, which is spot, which, you know, obviously we're at around 25. And then that black line is how the COMEX is always, you know, it's always been a rape and pillage fest for the shorts there. And they've always taken advantage of the longs. And that is exactly why you see this bending between the price ranges, intra COMEX versus outside COMEX. And the spot price has been suppressed because of this action in the last 11 years or so. But you can see that the red and blue line eventually do meet. They've done it multiple times throughout this 5 decades. They will again. And when they do, it's going to be triple digit silver, most likely.
You know, James, you're a great ambassador for the precious metals.
Oh, I appreciate that.
And your passion and the charts that you break out, you can make anyone, like, you know, I feel like I don't have enough after talking to you.
Well, that's good.
I mean, you're really a great ambassador, and you really lay out the picture and the case for gold probably better than anyone I've interviewed talking about physical metal before. So I really appreciate your analysis, and you could tell you've done all your homework and your conviction. So it comes across, and I guess the best line to leave you with is don't wait to buy gold and wait.
That's correct, Dale, and I appreciate the kind words. Thank you so much.
Yeah, so I mean, really, thank you, James, and keep in touch, and we'll get you back in the rotation, and we'll see what kind of prices we're looking at this winter.
Yeah, that'll be awesome. All right, Dale.
All right, buddy. James Anderson, and James is a broker. And,
go
right ahead.
There. Yeah, you can find me on Twitter. That's probably the easiest way that you see right now if you're on Twitter at James Henry and the website the high volume business that we work on is sdbullion.com, based out of Toledo in Southeast Michigan.
Yeah.
And sdbullion.com. It's a top 5 retailer of physical bullion, silver, gold.
I've bought from them before, but I didn't. I just had a call into my next purchase. You're my AE, and so it's a company that's been around for how long now?
Oh, since 2012, so almost 10 years now. Yeah.
Yeah. So reputable guy and a company that delivers when you send the money. So, all right, that's a wrap on. In the meantime, I'm doing a short scalp, looking for a test of the breakout at 1740. So, don't be pissed off at me that I trade both sides of it. Okay,
It's
man.
totally fine. I have no problem.
Right,
Just
anyway,
make sure you keep bullion if you're going to derivative trade around it. That's all.
Yeah, it's in I have some in my closet, man. I'm not going to tell you where.
No, of course not.
I mean, it's such a big closet. How's it? Anyway, my address is anyway.
Yeah.
Take it easy, my trading warrior brother, and you're like the Midas of the people that I interview. King Midas, James Henry Anderson.
Appreciate it, Dale. God bless you guys all.
All right, take it easy. That's a wrap, everyone. We'll see you tomorrow. See you, Paul, Richard, Chris, and thanks once again, James, for your giving spirit to bring your whole wrap here today. Adios. Hi, Laura, Monica, you guys. Adios. Oh, and guys, you could join the team, the Morning Edge. And for those of you, I brought it up yesterday, that miss hearing Steve Volge's analysis of all the pairs. Adios, Laura. Do what Blake said. Spend $1 and go listen to Steve in the Morning Edge. You'll get used to having him. You won't want to be without him. So I'll see you guys tomorrow. Okay, good hunting. Oh, don't just count your pips, count your blessings. See ya.